Hey, soldiers, we got to talk about the 529 plan. Maryland's 529 plan has run into some trouble, and people have trusted Maryland 529 with their money, and they're not able to access it. And this is an ongoing problem. Talk about counterparty risk. That risk that one might incur when the other party to an investment doesn't perform in the way that you expected them to. You never expect that to come from a government entity, right? Well, surprise. In any event, Maryland 529 is exposing the 529. Are there better vehicles out there to save for educational purposes? I think there are, okay? 529's got a lot of problems with it, and we're going to go over that in just a moment. Sometimes people when it comes to like these investment vehicles, sometimes people approach it as like all the crayons in a box of Crayola or all of the Pokemon cards, okay? You got to have them all. You got to have the 401k. You got to have a traditional IRA, Roth IRA. Got to have an insurance policy. Got to have a 529. Got to have this. Actually, what you should do is approach it from the standpoint of a toolbox. Now, if you're if you got a certain circumstance, then you'll need a certain set of tools. A carpenter is not going to have the same set of tools as a mechanic, an auto mechanic would have. And an auto mechanic is going to have a different set of tools than an aviation mechanic would have, or a plumber would have, and so on and so forth. So just because you've heard a lot about the 529 and you got a kid and you want to save money for that kid's education, doesn't necessarily mean that the 529 plan is the best way to do that. Now let's take a look at what happened in Maryland. The state's troubled college savings plan is once again blocking Maryland parents from accessing money they need to pay their child's tuition. Quote, the immediate reaction is, what's happening? Unquote. This according to Brian Savoy, a Montgomery County parent who started a Facebook page. This thing, Maryland 529, has so many issues that this guy started a Facebook page called Free Our Interest Now, Maryland 529. It's a devastating case of deja vu for families who place their trust and money in Maryland 529's prepaid plan. Now, look, let's dive in a little deeper on who this organization is. Who is Maryland 529? Now, we're focused on Maryland, but please, if you live in Omaha, continue to watch the video because we're going to go over whether or not this 529 thing really has merit over and beyond some of the other vehicles you could use for the same purpose, okay? So we're talking about the problems with one state. Your state might be experiencing this. You need to look into it. But as we go forward here, Maryland 529, it's actually an independent, nonprofit state agency. It is an agency of the state of Maryland. They got an 11-member board, and it is managed by T. Rowe Price. Okay, so it is managed by a very reputable, noteworthy company in the financial services business. However, you got another round of tuition payments coming due, and several parents that are, they have money in this plan. They're attempting to withdraw funds, and they're receiving an error message. And you don't want to receive an error message when it's dealing with your money, right? The message states, quote, there is a usage hold on your account through December 1st of 2023. Benefits cannot be used until the requested usage hold is removed. Implications of that message are that not only am I not able to access my earnings, but now I'm not able to access my principal either, explained Savoy. There's no information, no clarity, and there was no warning that these eligibility holds would be put in place. Now, you need to check with your particular plan, but remember, one of the reasons why he's so upset, and rightfully so, is because if he can't touch that principal, remember, the principal has already been taxed. So to get at the principal, he should face a very minimal, if any at all, tax burden on the principal. And so he's saying, look, I can't get at the earnings and I can't get at the principal, which has already been taxed. This is a nightmare because, the college is not trying to hear that 529 is having a problem. They want their money. Colleges are businesses, okay? They're not concerned with, intellectual enlightenment, okay? They're concerned with indoctrination primarily, but also they're in the business of, for those, savvy college students that actually pick a major that has economic viability, the college is in the business of, conveying upon you those skills that you are then going to trade for dollars out there in the world someday. This is a financial arrangement all the way through, folks. Initially, only interest earnings were being withheld. Last spring, they had a problem when it was just, they couldn't get at the interest. But then administrators said an interest calculation error had affected about 30,000 accounts. So the Maryland Prepaid College Trust blocked all interest payments. So they did it like kindergarten where, one kid's talking. So they say, all right, everybody's staying after school. Then last week, Maryland 529 started issuing new statement balances using an updated interest calculation formula. But that update slashed savings. I was shocked and angry, said Howard Griboff, a father impacted by the problem. Griboff's account dropped from about $86,000 to $30,000, a massive loss that sent him scrambling to make up the missing money. Good God. I've had to tap into my savings, he said. I'm also looking at my retirement funds. And he got into this thing so that his kids could go to college and he wouldn't, he was trying to do the right thing, basically, based on what society told him to do. Making matters worse, Howard is now among those whose funds are completely frozen. Even the money he originally invested. He says he waited hours on hold before speaking with a customer service representative who ultimately provided no explanation. The phone line for Maryland 529 spokesperson Michelle Winter is also out of service. I guess she said, you know what? I'm gone fishing. This is just crazy. I'm out of here. Now, the news agency that is reporting this, they sent some emails over and they did not receive answers to the emails at the point where they wrote the article. So that article was written on the morning of January 19th, 2023. Winter was only willing to say her phone is being impacted by a system-wide issue that the Maryland Department of Information is working to get resolved. How convenient that she had that issue around the time that people are calling her to inquire as to where the hell is my money. According to Maryland 529's website, tuition benefits have always been and remain available. Tuition benefits were never frozen. Now they're straight line. They're calling the parents liars. Well, that's par for the course, especially in a country where, if you stand up and protest the fact that your child was read an sexually explicit book during their first grade lunch hour, and you come up to the school board to complain about it, well, the FBI might come after you. They might knock on your door and try to figure out what the hell's going on here. Why are you being so revolutionary? So 529 is saying, hey, well, we don't know what you're talking about. You get the money, but the parents are saying, no, we can't. All right, the Maryland General Assembly, that's the legislative body here in the state. They are in session. Got a new governor. Some people need to call his office and say, hey, look, this state-run program is, at this point, misappropriating funds left and right. We need you to do something about it. Now, here's what you can do about it. Let's take a look at the 529 plan. And let's try to figure out whether or not this thing is even all it's cracked up to be. Because, a lot of people were told, hey, max out your 401k, just put all the money. Now, I do believe that if you're getting a match on your 401k, you should contribute up to that match limit. That's what I believe personally. You have to do your own due diligence and figure out what's good for you. But the reason why I'm not throwing everything into a 401k, because when I'm responsible for paying taxes on that money, taxes are going to be a lot higher. The United States is at over $31 trillion in debt. And as of today, we are trying to get this debt ceiling increased again. And to just give you some background on that debt ceiling increase, I want you to perform an experiment. I want you to call your credit card company and I want you to tell them, hey, look, I need some more money. I need you guys to increase my credit limit. And they might say, okay, let's take a look at it. If they come back and say we can't do it, say, no, I insist. My debt ceiling, I need my debt ceiling to go up so I can, spend more money and meet the obligations I've already committed to, kind of like the U.S. government. All right, try that and see they might hang up on you. Okay. They might cancel your card. So seriously, don't try it. All right, let's take a look at the pros of a 529 plan. You get tax-free growth on your investment earnings. Okay. So in that way, it's kind of like a Roth IRA. And you do get tax-free withdrawals. Again, like a Roth IRA. Both of these characteristics, the tax-free growth on the investment earnings and the tax-free withdrawals, they both mirror the Roth IRA and the permanent life insurance policy. Now, why I like those options is because, for the reasons I just mentioned a moment ago, when the taxation comes due, when invariably taxes will be higher in the future, you have already taken care of that, okay? Up front, you paid the principal. You went ahead and did that. And so you paid the taxes on the principal when taxes were lower, and you put it inside a vehicle where it was allowed to grow tax-free, and you were allowed to get tax-free withdrawals. But here's the problem. Unless you spend that money from a 529 plan on qualifying educational expenses, then it becomes taxable, okay? So let's say little Johnny, he really blossoms in high school, and kid is just a genius, all right? And scholarships are coming in from all directions, all right? Little Wilhelmina, she turns out this little girl has turned into just the world's greatest golf player, okay? And same thing with her, scholarships left and right. You've got, room and board, everything. They want these kids at the colleges. They give them anything. Just come to the college, food, books, room, board, everything's taken care of. Okay, so let's say you got $500,000 in your 529. So what you got to do is you got to find another qualifying family member, okay? Maybe your brother-in-law's kid, Josephus. He never did that well in academics or sports. Need a little help. You don't really like Josephus, though, nor your brother-in-law. So you really get a lump in your throat when you talk about maybe transferring this money over there. But that's the only way that you can get at it without taxation. Okay, so what do we have there? We have a very structured, very limited use for the money that's in a 529 plan. Once you put that money in there in order to take advantage of the tax-free withdrawal, you've got to take it out for one purpose and one purpose only. Okay? And I don't like that. I don't know about you, but I don't like being told that in order to get your hands on this money, you need to use it in a particular way, or you face future taxation. Now, they do have high contribution limits. You got to look into it for your state. As always, I don't want to go into specifics. You got to do your due diligence and figure out what is appropriate for your area. And some of the states out there, they do provide tax deductions or tax credits for contributions. So that's another pro, okay? I already told you about what I feel is the biggest con, is that you have to use it for a certain purpose or face future taxation. And if you use it for something other than educational purposes, you could be looking at not only income taxes, but a 10% penalty as well. The fees in these plans tend to be higher. There are limited investment choices, and some rules around ownership all vary state to state, plan to plan. Okay, so again, I think that if you want to save for a child's education, there are two vehicles that are going to allow you to do that without the limitations and expense and the counterparty risk that we're seeing with Maryland 529. Okay, yeah, T. Rowe Price is managing it, but something's going on in that department, not T. Rowe Price, but in Maryland 529. They're not answering the phone. They're not responding to email, and they've got people's money. You saw the one guy, he went from 82,000 to 30,000. This should destroy Maryland 529. I wouldn't come near that option with a 10-foot pole. Not after these revelations. So the Roth IRA and the permanent life insurance policy are both going to allow you to realize tax-free growth, tax-free withdrawals. And look, let me be absolutely clear. When you're talking about a Roth IRA, the principal amount can be withdrawn at any time without penalty, okay? The principal amount. The Roth IRA does also have sort of a restriction in that it is a retirement account, okay? So it is, I want to be very clear about that. So in order to get tax-free distributions from a Roth IRA, that you can do that as long as the Roth IRA, that is, has been open for more than 5 years and you are at least age 59 and a half. So there is a restriction on the Roth IRA. However, they're not telling you how to use your money once it is accessible. And look, I don't really have a problem with that restriction simply because the tax break that they're giving you, okay, in the all-important future taxation category. Now, with the Roth IRA, it does have contribution limits, $6,500 for 2023, $7,500 if you're over age 50, okay? So it does have that. The permanent life insurance policy, you can structure that so that the contribution limits are much higher, all right? Now, if a Roth IRA is going to be part of your college saving strategy, you do have to consider the ages of your college-bound child or children. The reason for this is, remember, if the child is going to be going off to college before you turn 59 and a half years old, then that might, introduce some age-related tax implications. So you have to, do the back of the napkin calculation on when the kids will be going to school and whether or not you're going to be able to put your hands on that money from the Roth IRA at that point in a fee and tax advantaged way. Now, with the permanent life insurance policy, there are no age-related tax implications. You can go in and touch that money whenever you want, as long as you take that money properly as a loan, then you will mitigate the taxation piece of it. So that's something to consider. So I think that a combination of the Roth IRA along with a permanent life insurance policy, that's the way to fund college. You're going to be able to connect to indexes that track market performance. With the insurance policy, you're going to be able to insulate yourself against loss if it's structured properly. And we'll be going into more of that. We've done videos, reports rather. I like to call them reports, not videos. We've done reports on that vehicle in the past. All right, guys, it is important to use these vehicles so that you can maintain your journey on the road to economic independence. The world is changing. Case in point, Saudi Arabia just basically did something that's going to affect your financial future right here in America. Watch this video. I will explain. Watch this report. Watch this report. It will be explained to you in detail. Guys, I'll talk to you soon.